Hello, and welcome to another episode of the MiamiHal Real Estate Show, where every single week we talk real estate. This week, we're going to be focusing on condos, as we always do when Peter Zalewski stops by. Peter, thank you so much.
My pleasure.
Tell us a little bit about you and the club that you run, and then we're going to get right into the meat of things.
Fantastic. I got to Miami in 93. I've been through a number of cycles. I focus on real estate, especially condos, digging the data. I'm a former journalist, did it 13 years, variety of different positions, worked on the print side. As I say, I had a face for radio. I couldn't do TV. Yep. And here we are. And now I have a club called Miami Condo Investing Club. Basically, we collect data for Wall Street, and then we share it with members of the club. And we give an opportunity to create a community, get real-time information about what's going on in the condo market, Tri-County, South Florida area.
Yeah, you were really popular during the last downturn.
They absolutely love me so much that Michael Moore did a movie, and he decided to include me in it. It's called Capitalism, a Love Story. Right. I had hair back then, so if you watch it, you might not recognize me.
Peter, you were very popular back then, and I think you're popular now. Am I worried? Should I be worried?
Well, you know, what they say is whenever you see me come in, it's kind of like the Grim Reaper. It typically means bad news is coming.
Oh, boy. One of the things you've said recently in one of your newsletters is, what was the quote? I'm blanking right now.
We call this summer a summer of paralysis by analysis.
That's the phrase. Yes.
Yeah. Some people call it wait and see. Basically, people are afraid. They sit on the sidelines and they don't do anything, and they analyze numbers and they come to the conclusion that they don't know what to do, so they sit on the sidelines. Yeah. So they get paralyzed.
Yeah. And we are focusing on condos, but a lot of times during the show today, I'm going to interject that this is also happening in residential real estate. So one of the things that I can count on every single year is that as school lets out, that's when the activity picks up. And we have 2.5 months of relatively healthy and sometimes very healthy velocity, where people are out in the market, they want to buy, we get contracts, we get things closing toward the end of the summer, and you can go in any time of the year and tell people that's the time you really want to be on market. And it's historically worked every single year, except for this year.
Except for this year. Yeah.
Tell me your take on that.
I'd almost, is the way we look at the world is there's two seasons. There's wet and dry, or there's winter and summer. Summer is going to go from May through October. Yeah. So on May the 1st, we came out with a newsletter saying this would be the summer of paralysis by analysis for a variety of different reasons related to condos. One had to do what we call the Florida Condo Association financial cliff. This is basically surfside stuff. It's legislation, it's maintenance fees, it's hefty special assessments, insurance. But then in addition, you had macroeconomic issues. We had a change in the presidential administration. We had an announcement of Liberation Day tariffs, which took tariffs from roughly 4% to now an average of 17% or so. Certain countries even higher. So there's just a lot of uncertainty. Stock market pulled back, then it's rebounded. It's on fire right now. Interest rates, they're still stuck. A lot of people say I can't buy or I can't afford to buy until mortgage rates are, maybe a 5 handle. Right now they have a 7 handle.
Yeah. But historically, 7's not so bad, is it?
No, 7% is fantastic. The problem is people got addicted
to 2.5.
To 2.5. And they were shopping for 2.
And we went in a prior show and dug pretty deep into all the things you just mentioned. But one of the things we really didn't talk about was the mentality around folks that did get an interest rate between 2 and 3%. There was like a 1.5 years of, my gosh, we can do anything. We can conquer the world. And I'm only paying, this for my loan. This is incredible. Those are the same people, some of them, that now either want to sell or need to sell. And they're going, how can I do that? I'm going to lose 2.5% and I got to go to 7. And I think that's a lot of the paralysis besides the analysis.
Oh, 100%. Yeah, depending on which camp you're in, you're going to run into some sort of obstacle or roadblock, or maybe you're just reading the political news, you're reading the economic news, you're reading that the fact that the person in charge of releasing federal statistics was just fired.
You went there early.
well, I think you have to go there because my concern is, or my focus is, put out numbers, go to transparency, and once the numbers are there, people can make an educated decision. Now, if we suddenly start to call into question the numbers, how are you going to get off the sidelines if you don't have a confidence in what you're being told? And I think this is one of the issues. Hopefully, it's going to get resolved in such a way where people will continue to have confidence in the U.S. Statistics. But then that also trickles down locally. If you start to tinker with numbers locally, everybody's going to be like, well, what can I really trust? What can I believe? And this opens up the doors for charlatans to sort of, hustle you. And then you're like, okay, do I go in? Do I not go in? And what do? You sit on the sidelines. Yeah. You wait.
So let's talk about that, because one of the things, look, I'm not an expert in that field, but the labor statistics, it's raw data, right? There's nothing to massage or to display a different way. It's been displayed the same way year after year. And here we have...
Which is a key. As long as you do it the same way,
right,
it's fine. Now you're comparing apples to apples.
Except we have an administration, in particular Trump, who went and fired this guy, right? For providing raw numbers to the country.
Yeah. So this woman was in charge of all these statisticians that go around. She's got a PhD. All of these statisticians, they all have to feed in a critical element. Think about like making a car. Right. It's not like one person is putting together all the parts. No. And she's basically the tip of the spear. If she gets marching orders, she tells the other statisticians what to do. So to blow her out, now suddenly you're going after the famous quote that James Carville, the Democratic political activist, said, or campaign manager said. He said, "When I die, I want to come back as the bond market." Why do you want to come back as a bond market? Because that's where the money is. It's not in the stock market. And they invest in bonds, and that affects interest rates because of statistics, because of data, because of transparency. If you lose the bond market, or if you have people moving elsewhere, what's going to happen? It's going to cost more money, or you're going to have to offer more in interest rates in order to bring money in, which means your mortgage rates could even go higher.
So going back to this, she gets fired
Friday. Job numbers come out in the morning, 8:30 or so, 9 o'clock. She gets fired between 2 and 3 o'clock.
So
August the 1st.
We don't like the numbers. She gets fired. And what happens in the future? In the future, the same raw data is going to be produced, right? So somebody else is going to give the same numbers. Now, hopefully, none of us like the fact that the numbers came out the way they did, but it's raw data, and you got to live and work with the numbers you get. Okay, so
let me just give you context.
Thanks.
Tuesday, the federal government releases the preliminary GDP numbers. How fast is the economy growing?
Right.
First quarter, we contracted. Second quarter, many people, including myself, thought we were going to contract again because you had to basically digest the Liberation Day, the immigration crackdown, all this type of stuff. So I thought for sure we were going to come in with a contracting GDP in second quarter. But it went up. It grew by 3%. So I didn't question it. I said, okay, well, maybe it's not what I'm seeing. Now, because of Friday's firing of the director of Bureau of Labor Statistics, now if they would have reversed it, I would have had questions about that GDP number. And this is where the doubt starts to creep in. And once the doubt creeps in, you don't know what to do. You get paralyzed. You sit on the sidelines and you wait and see.
So let's extrapolate that and bring it to the local market.
Oh, yeah.
Because one of the things you and I were discussing just before the camera started rolling is that we get data out of the MLS and the board.
That's right.
And they produce on a monthly basis a number of statistics.
That's right.
And you're a little concerned about how that's being produced now.
Yeah. I wrote a column 2 weeks ago about it because, let me give you background. So there's Federal Reserve, which is Washington. That's Jerome Powell. That's the one we all see every time there's an update to interest rates. Under the Federal Reserve out of Washington, there's several regional banks. The bank that Miami falls under is called the Federal Reserve Bank of Atlanta. Miami's a branch under Atlanta, which answers to Washington and Jerome Powell. So the Federal Reserve Bank of Atlanta, out of the Miami branch, they released a report calling a condo crisis in South Florida for everything we've discussed, all these other stories. Now, what caught my attention and what worried me 2 weeks ago is that in the report, a local prominent real estate broker said that equilibrium in a market, a healthy market, in other words, is 9 months of supply. Now, this doesn't seem like a big deal because everybody knows it's 6 months. It's always been 6 months. AI knows it's 6 months. But what it is it's a 50% move.
Yeah.
It's effectively a devaluation, if you will, of how you look at the data. Now, why would that be important? Well, it's important because right now in South Florida, there's 13.3 months of condos on the market, supply, and 16 months of supply in Miami-Dade County. What does that mean in layman's terms? That means if nobody else puts a listing on the market at this current pace,
a year and a half.
Yeah, it's going to take you a year and a half to sell. So my concern in writing the column is, hey, if you're going to change the benchmark, if you're going to change the way we view things, like baseball, you hit 300, you're probably going to the Hall of Fame. That means you're successful 3 out of every 10 times. Now suddenly if they say, well, if you hit 250, it's not a big deal, or 225, it's not a big deal. This is why it's so dramatic. But that was a predecessor to kind of what happened. Yeah. I'm not accusing, I'm not alleging. I'm just saying if you're going to change,
it raised your eyebrows. Yeah, they went from 6 to 9 months.
If you're going to move the goalposts, tell us you're moving the goalposts. And tell us why you're doing it. Yes. And then, also to anybody in the Realtor Association, for disclosure, I served on the board there for a number of years, probably a decade ago or so. But what I would tell you is, why don't you come out with a rules of engagement? Tell us every single indicator that we need to gauge the market off from your perspective, and then let us make our adjustments. But the key is transparency. No transparency, you sit on the sidelines, you end up with paralysis by analysis.
Yeah. Now, you're there looking at numbers on a daily basis.
I love numbers. I love condo numbers.
Yeah. And
baseball numbers, too.
Baseball. Good.
Yeah, baseball.
We might get to that if we have time. But you're looking at numbers every single day. And the numbers aren't good, are they?
No, they're not good. They're not going to good. We have a big spread. We have a big difference between what the asking price is and what the transaction price is. But interesting enough, we're seeing the number of listings actually tumble. It's peeling off. So while we were in the winter, which is November through April, we thought we would be on pace for 40,000 listings by this time in South Florida as people look to sell off because of maintenance fees, because of property tax, because of all of it. We're actually down to 26,000. So we've reversed from close to 30. We thought we were going to 40. Now we're sitting at 26, and it looks as if we're going to continue to lose listings. So the question is, why are people not listing? And what are people who take on listings, such as yourself, what do they make of it?
Which is always difficult because everybody's an individual. And there are different reasons to move. There are different reasons to buy. There's different reasons to trade up or down. Family sizes change. So it's very difficult to say this is the one bucket and this is the reason why something happens. As you said before, it is the culmination of many, many factors. And what I find interesting is, we as realtors, we see the market about 2 months ahead of you reading the numbers.
100%.
But we only see a very small neighborhood. It's our little sandbox. We get our feelings from our sandbox, and then that gets amplified typically by folks like you that do the analysis and look at all the numbers from all the way up to national level. But specifically, you try to stay Miami-Dade County. I would assume.
Broward and Palm Beach as well.
Yes, yeah. But our focus today is Miami.
Yeah, 100%.
And so what I find interesting is that all feeds into it as well. So even though there's macroeconomics, there's stuff going on here, the numbers themselves and the number of news stories that are consumed by a buyer and seller all add up to a sentiment. So it's almost a reflection of ourselves. And right now, that reflection in my mind is taking us down, not up. Your thoughts?
I would agree. So when we got into August, we began, we were at the halfway point of the summer. Okay, so traditionally, from a condo perspective, look at the numbers. The way it happens is during the winter, November through April, people come down here, they party, they want a tax write-off, so they go look for real estate, they do whatever they're going to do, and they tend to close in the second and third quarter, generally speaking. Some people are getting ready, they need a place so their kids can go to school. You kind of got all these different issues going on. So what we're sort of seeing now is we're seeing a situation where we would have thought there would have been more absorption. We would have thought there were more people getting in. Remember, school's going to be starting relatively soon. You got the university starting, but we're not seeing that. And we're starting to see a pullback in rental prices, according to a report that just came up from CNBC. This is the highest vacancy level in some of these corporate-owned rentals that they've seen in a number of years. I haven't run the numbers on it. I'm simply going off of CNBC.
Yeah.
But there's not a lot of positive news. There's not a lot of reason to say, listen, I'm sitting here, I'm on the couch, I'm watching Netflix. Why would I get off the couch and actually participate? And that's the problem. We are missing the catalyst. We're missing the, the trigger to actually get you to do something. And that might be one of the reasons why you see these listings peeling off, because they're not selling. People want a certain price. Maybe they overpaid when a lot of circumstances they did. And now they're coming to the realization that, oh, wow, we're in trouble, which I would tell you is this is what we experienced in 2006 when we were peaking. This is what we experienced in 2007. And then there was a black swan. That's an event you're not expecting.
Right. In
September of 2008. And as soon as the black swan hit, everybody ran for the exits. So I would just say to people, if you're sitting there on the market listed, if you really want to move, you need to be bold. If you're bold, you will get out the door. The problem is if you wait too long, my experience is, as we go into where we're going, this trajectory, chances are the prices next year is going to be less than what the prices are this year, unless there's a dramatic change, i.e., blow out the Federal Reserve chairman and interest rates are 2% again. Then, you got gasoline on the fire.
Yeah, I don't want to create fear.
No, I'm not trying to create it. I'm saying
I know you're not.
Numbers.
I know you're not. I don't want to create fear, but I too get this sense, and it really is hard to describe. You have numbers to back you up. I have a couple of numbers. I have listings. I've got a couple of buyers, and when you look at all of them holistically, and I'm looking at things from condos at a relatively meager price point, all the way up to some pretty expensive mansions, right? And so that's my world. And I typically work south of downtown Miami. Just looking at that, I can feel it. It's palpable that everybody's waiting for something to happen. They don't know what it is. They're not like saying, hey, I'm waiting for the September 15th report. They're like, something's going to happen. And once that happens, then I'll make a decision. And that to me is scary because it's uncertainty.
It's uncertainty.
Yeah. And uncertainty, we know the saying, not only in real estate, anything, when there's uncertainty, what do people do?
Sit on the sidelines. They get paralyzed. Wait and see. Yeah. All of the above.
So I gave you my thoughts on what we were going to have happen before the end of the year in the way of price declines. Maybe you want to be so bold as to say what you think is going to happen in the condo market, because I know you've said a few things through your newsletter. What do you think is happening in the between now and December 31st of this year?
So here's sort of the key. So in January, I was quoted in the South Florida Business Journal. The South Florida Business Journal, it was doing a where are we going in the future story. So in January, they interviewed me and I said, I'm expecting a 40% decrease in pricing from pandemic highs. Now understand, pandemic highs were really high. We ran into a number recently, 69% increase in valuations of condos, South Florida wide, from the winter of 1920, so that would have been November of 19 to April of 2020. 2020. No.
From 1920.
Yeah, from November of 2019 to April of 2020, because we look at it in two seasons only. Okay. And then if you fast forward to this winter, we had 69% appreciation. And we all know we've had a lot of product put on the marketplace.
Right.
So it's all come on there. So when we called a 40% price drop, it would have got us closer to being in line where if we would have appreciated about 5% annually over the course of the 5 years, or you get to my famous 1% rule that I always talk about.
Yes.
1 month of rent should represent 1% of the value. $1,000 a month means the $100,000 place. $10,000 a month means a $1 million place. Today, I pulled some numbers in anticipation of this. Let me just tell you today, the average asking price of a condo in South Florida, this is Dade, Broward, Palm Beach County, 13 months of supply. Remember, 6 months is equilibrium, so this suggests we're in a buyer's market. If you listen to the Realtor Association, they're now saying it's 9 months. It's not 6 months. It's 9 months now. So we're still in a buyer's market.
Folks, it's 6 months.
It's
6 months.
It is 6 months. So the average ask today is $819,000 for a condo in South Florida. This is old, new, everything. And if you go to the 1% rule, $819,000, $819,000
should be an $8,000.
Should be an $8,000 a month rent. The median rent in South Florida is $2,300. It's about 2.6 times what it's supposed to be. Now, this is not perfect, but it's a back of the napkin approach.
Right.
When I hear about it, I run the numbers and I say, should I go see it? Should I waste the time of my representative to get the information? So right off the bat, it says, no, this is a no-go. Now, let's drill down to Miami-Dade County. Miami-Dade County, there's 16 months of supply. Don't put anything on the market. 16 months from now, everything.
We're talking about condos only.
We're talking about condos only, not single family. The average ask is $1.2 million, which means you need $12,000 a month rent. What are you actually getting in Miami-Dade County? $2,650. So the proposition is, I want you to buy this $1.2 million condo, and if you do, you're going to make $2,650 a month. Oh, by the way, you got to pay property taxes. You got to pay maintenance fees. You got to pay everything else, special assessment, potentially insurance. And this, I think, is why the condo market is basically stuck in the mud, because we have interest rates of 7%.
So around the year, I'm going to say 2004, if you were making a smart investment choice down here, you'd be looking at maybe an 8 cap. Is that about right?
Yeah. I mean, that's ideally what everybody shoots for.
Okay. What are people getting today rather than an 8 cap?
On an individual basis, I think you're underwater. I don't see how you could be making any kind of money. Although I am aware of, by running the numbers, we're able to find buildings where you are finding that they're within this 1% rule, if you will. So there are select buildings. What are the common tendencies? They're small. They're efficient. They don't have hallways. They don't have amenities. They don't have any. So you probably wouldn't live there, but it's a great property to buy and rent to somebody else. And now you, when you want to live somewhere, you should go rent from somebody who overpaid and will subsidize you to live in that place with all of the bells and whistles. And that's the disconnect we have right now. And then throw in interest rates, and then also throw in this question and concern about transparency.
And I also look at what I feel is healthy. And when I am out there on the market listing places and helping buyers move to this area, I like to see individuals. And what I'm seeing, a long trend of maybe 10 years or so, is that the number of businesses rather than individuals that are purchasing and selling and trading real estate is incredible and continues to grow. And I don't remember the exact source, but I now am hearing that in Miami-Dade County, it's approximately 40% of the transactions are not with individuals selling to each other.
Yeah.
There's a business behind it. And maybe you can talk a little bit about the business that you were privy to a number of years ago, BlackRock.
Yep. So just to give people context, now some of it might be purchased under an LLC, which is basically you pay your accountant $500, whatever it is. You set up a corporation, you do it this way, you're able to do stuff. Back in the day, the reason you use an LLC is people would simply sell the operation, the LLC, rather than the real estate, to try to avoid all kinds of taxes and fees and stuff like that. The state has now since cracked down on that, so that doesn't go on the same way it does. But what I will tell you is what's really happening is they're rolling up the condo market. And I first saw a glimpse of it in 2009, 2010. Why? Because at the time we had way too many condos, and nobody was necessarily buying. Foreign nationals were coming in here. They were picking off one at a time. In fact, the building I'm going to refer to is actually in our panoramic backdrop, if you will. Yeah, building over here called, it's called Biscayne. It used to be called Everglades on the Bay. So 800 units or so, 680 or so were for sale, moving in bulk. The project ran into problems. Developer had died, all the so on and so forth. So BlackRock comes to town, and they're thinking, let's go ahead and buy this 80% of this complex. And what we'll do is we'll hire an engineer or two. We'll keep them in there. It'll be very efficient. Anytime there's a problem, the engineer, whatever, they get on the elevator, they go up, down. It's all centrally located. The problem is they got outbid primarily by institutional money and or foreign money who picked off a certain number that threw off their criteria. Many of these groups wanted at least 51%, just like, you would in regular companies, so you can control it. They couldn't get it. And as a result, they said, you know what, our model, my opinion, instead of being vertical and having all of the units in one place with a set of elevators, let's tip it horizontal. Let's go after single family. Because nobody was going after single family at the time, and U.S. buyers were tapped out. Foreign nationals come in. They didn't necessarily want the challenges, landscaping, putting on hurricanes, all that type of stuff. So BlackRock went west. They went into Dade County, Broward County, Palm Beach County, started buying up stuff. And what they did is they hit investor clubs. Dade Real Estate Investor Association, the Broward Real Estate Investor, Boca, all the stuff. They went there, and these are the people who run these signs. We buy ugly houses. You don't need a realtor. Give us a call. We'll close in 10 days.
Right. So
they call it wholesaling. So the BlackRocks of the world, they put a representative here, went out to all these clubs and told them, I'm paraphrasing, bring us anything you got. We don't care the price. So the locals thought, okay, these guys don't know anything. They jacked up the price, and BlackRock still took it down. So everybody went to BlackRock to buy. And lo and behold, they gobbled up a lot of the distress. Many thought that they would dump. They would resell it, kind of move along. But they haven't. They've structured some stuff, and they're still sitting on a super number. And then you have these new companies like some of these REITs, real estate investment trusts, that have been set up. So they're all rolling it up. Yeah. But now they're starting to move increasingly into the condo game.
The institutional buyers, which continue to grow, do you think that it couldn't be the only problem, but tell me how influential them being in this market could be to our success or our failure?
Oh, I think it's very simple. And this is something everybody could probably relate to. So the idea was, I'll come here. I love South Florida. I'm going to buy a condo. I'm going to rent it out, whatever. Yeah. So you got a realtor. They hire Hal. Listen, I got $1 million condo. I want you to rent it out. I don't need the 1% rule. I just kind of want to have that condo. So that's fine. And you're able to compete against other, let's call them one-offs.
Right.
Regular.
That's what they are. They're one-offs because that's the buying power. I can buy one, maybe two.
Yeah.
And this is my investment for me personally. Institutional, much more powerful.
So you put this buyer,
yes.
your customer, your client, you put them to a deal, and then you have to turn around and rent it. And you're going to give them, based on all your experience, you're going to give them an understanding, and they're going to know what the cost is. They're going to know what they can generate based on data. You're relying on data. Now, all of a sudden, you're going to get institutional money in that has the wherewithal of a Walmart versus a downtown retailer who's a florist. Now, suddenly, what they can do is they can lower prices enough to undercut the one-offs. Now, these one-off owners start to lose their properties. Who's going to be buying it? It's probably going to be institutional, or it's going to be institutional-minded groups, and that is the issue we're up against. So, we might be seeing the phasing out to a certain extent, the beginning of the phasing out of individual one-off condo owners who are trying to, to rent it out. So what we did is we took a look at Airbnbs. We want to see what was going on in the Airbnb market.
Good place to look.
Yeah. There's a website called airdna.co. Not .com, but .co. I was referred to it by a financial journalist. They said, hey, check this out. We rely on it all the time.
Fabulous website.
Yeah. It's fantastic. So we took a look at it. There's about 400,000 Airbnbs in the state of Florida and about 70,000 in the Miami-Dade, Broward, Palm Beach County areas. So we took a look and we said, what's the occupancy? What's this? What's that? So roughly about 60% of the nights in a month are rented out. So you got a 40% vacancy. What kind of rents are they getting, or what kind of overnight stay? About $283 per place. And how much can you make? Some of the ballpark of about $60,000 is what these Airbnb investors are making or attempting to make. The problem is, you look at the number that are for sale. Suddenly, we're seeing an uptick in the number of Airbnb properties that are being listed. We took a look at the MLS. It's completely different than what airdna.co does, but to give you an idea. So the reason many people, I think, rushed in the condos is they thought they could Airbnb them. Now, I think increasingly, especially with what's going on economically, alligator Alcatraz-wise, that could have some real issues on the Airbnb market. So watch for a potential sell-off in Airbnb types of units, which are short-term rentals, which allow you to rent 365 days a year. That would be my expectation. So, hell, listen, if you're at Brickell City Center and you're shopping and you're going to the restaurants and you're partaking, if you walk out of Brickell City Center and you get on 8th Street and you go 50 miles due west on Calle Ocho,
yes, you're
going to be at Alligator Alcatraz. And they say, well, yeah, but we got to get rid of all the people, blah, 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 blah. Well, we ran some numbers. 42% of Miami-Dade County, of South Florida population, 6.1 million people, are foreign born. 42% of this area. And what does that bring? That brings cultural affinity. I'm here, my friends and family come to visit, they like it, they buy, and so on and so on and so forth. Now, if you suddenly cut off 42%
the affinity is going away.
If you cut off the infinity, who is going to take these people out? Who's going to buy when they bought during the pandemic because they thought they could work from home? They didn't know AI was going to blow up. They didn't know Jamie Dimon of JP Morgan was going to make them come back to New York City and not allow them to work in Miami World Center area. Who buys? Who takes out this stuff? And this is why I think I call the 40% price drop from the pandemic peak back in January, not knowing a lot of these other things, but I could just see from the numbers. Again, I'm not scaring people. I'm saying these are the numbers, and you can't fire me. You can choose not to read or not to listen to me, but these are what the numbers are indicating.
Okay, you said that in January.
Yep.
What day is today?
Today is August the 4th.
4th. We're doing the recording.
Yep.
Prices haven't dropped.
No, they haven't dropped.
So are you saying you still believe between now and the end of the year we got a 40% drop coming to us?
Now I'm going to give you my legalese. Here's my legalese. Here's my cha-cha-cha.
Okay, go.
My cha-cha-cha is, I think it's inevitable. It's a gradual. Why? Because it's real simple. They say when you invest, especially in the stock market, you take the stairs up. So it's a slow walk and the elevator down. And that's inevitably what happened during the Great Recession. We were grinding, trying to go after distress from 2006 all the way through September of 2008. As soon as Lehman Brothers failed, the market imploded. It unraveled in dramatic fashion. So I would tell you, people are holding firm right now. They have a stiff upper lip. But as soon as the first rat jumps from the ship, as a cliche goes, many people will continue to bail. And this is the reason I mentioned, if you do need to get out, be bold, move it right now. And chances are, if you reflect back, if I'm right, you reflect back, you're probably going to be happy you got the price you got, because based on the numbers, if I buy a $800,000 condo in South Florida, I can get $2,300 a month rent. I don't know who that makes sense to. Not even money launderers, who they crack down increasingly on here.
Well, I will simply say that one of the other things you talk about is a condo cliff.
Condo cliff, yep.
And I will expand that to residential real estate as well. I don't think it's a 40% on residential real estate, that aren't condos. However, I do believe we're headed to a cliff. I love your advice, be bold, because that's what I'm telling my listings and the people that want to list with me. It's time to do it now. We know what's going on now. We don't know what's going to happen next week. And with this administration and what's going on globally, it can change radically in that week. So let's, with the brief seconds we have left, tell us about your club and how people can get involved.
Sure, absolutely. So the focus of what we do, the focus of what we do is basically to share real-time information, actionable information with members of the club. Everything is virtual. I publish about 5 to 6 pieces per month. There's a paywall. If you're a club member, you get to go behind a paywall. Once a month, I do a monthly overview of what we've learned over the last month. And then finally, we also do a meetup. We do a meetup where people have an opportunity to come, talk shop, get to know others. And you also, too, you get a discount if you take one of our tours. We do walking tours. We'll go into a market. We will study all the different buildings. We'll give you a list of every single building. We'll teach you how to analyze a building. We'll tell you which buildings are doing well, which are not doing well based on statistics. And right now it's walking, but we will be bringing back, anybody who remembers, we're bringing back the bus tours.
Wow.
You get to get on a bus. We'll drive you around. I'll be barking mad fast over a microphone, and you'll walk away understanding the market. Now, you might be a seller, and you might say, wow, Peter is crazy, but it'll give you insight as to what the investors coming down the pike, what they're going to be looking for, and how you need to address the issues. Because, if you have the barbarians at the door, you better know how to defend yourself against them.
All I can say is highly valuable stuff. Get involved with him at whatever level you feel comfortable with. What's the website they can go to?
You can go to MiamiCondo.club. MiamiCondo.club.
All right. One more week in the can. If you want some good real estate advice, Peter Zalewski can certainly hand that to you. And if you want to do something right now, I'm certainly available. MiamiHal.com. Until next week, have a great week in real estate. Thank you.
Thank you, Hal.